Okay, and we are live. This is Travis Witherspoon from Carter Cow Trading, Carter Cow Capital, on YouTube and on Instagram and on obviously and on Facebook. Hopefully everybody's doing very well. Just hopping into the screens, looking at the charts, and doing everything else like that. And getting ready to get set up. So if you would, just allow me a quick second just to be able to get everything put together. Then after that, I'm getting ready to show myself on my screen. While I'm doing that, I'm going to go ahead and get through the disclaimer. I'm not a CPA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to do for Forex trading. Now, understand that Forex trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So if you would, just once again, give me one quick second while I get ready to show myself on the screen. And then after that, we'll go ahead and take a look at the charts and be able to go from there. So switching over right now as we speak. Hopefully everybody's doing very well. Today is one of my favorite days of the month. This is boot camp week, and this month's go-to idea is basically believe in yourself and change end up coming. So hopefully everybody will end up doing that. I actually end up getting some shirts made, got some new merch and everything else done. I want to see what you think. I'm actually getting ready to stand up and actually get ready to show you right here. So hopefully everybody ends up, if you end up liking the shirt, drop a like or anything else like that. I am going to end up having this for sale at some point, along with all of the other things that we have going on. So if you are new to what we end up doing here, this is a live interactive Forex session. Typically, I end up doing this at 7 o'clock in the morning to 7:30. So for the people that are going to end up watching this a little bit later on, hopefully this can be able to help out your trading throughout the overall day. For the people that will be watching this live, I do appreciate you hopping in. If you would, drop a like inside of the comment section so I can be able to know who you are. And please make sure that you end up subscribing to our overall social media platforms. Once again, really trying to push that and trying to get that established a little bit more so everyone can be able to see what we're doing for our content. Y'all are the reason why I'm actually doing this, and it helps out a little bit more to be able to make sure that we can be able to get that done. So with that being said, let's go ahead and hop onto the charts. Let's see what trading opportunities are there. And then after that, we can be able to move on from there. So earlier this morning, I ended up going to my currency strength meter, and I ended up seeing this bad boy right here. I ended up seeing that the pound ended up pushing way up, and then I ended up seeing that the US dollar was pushing way down. Now the US dollar pushing way down is not surprising. If you look at what happened last week, we talked about that was a transition move. We talked about how the dollar was supposed to be able to get stronger. We talked about that in order for the market to be able to move now and to be able to have a transition move from being able to be strong, it has to go weak for a couple of days so people can be able to say, okay, well, I want to get in with value. Once that ends up happening, then after that, I think we're going to end up having another strong move. So the US dollar being weak makes sense. When it comes down to the pound, we're looking at this overall move. We're saying, okay, well, why is the pound getting stronger? Well, it goes back to Brexit and being able to have Brexit talks and being able to see if they can be able to figure out something with the European Union and being able to make a decision from there. So The pound is strong. The US dollar is weak, and the pound is strong against every pair right now. So this is a great setup when it comes down to an overall move, because if we're looking at it, I believe that we're probably going to end up seeing some more negative Brexit news. But in order for you to be able to sell on the pound, you have to be able to wait for the pound to be able to give you a high price. So with that being said, we're looking at these high prices and seeing if we can be able to make a trading opportunity off of them. So just keeping that in mind. If you look at every other pair, you see every other pair pretty much right below the median line, aside from the Australian dollar. And you look at the Australian dollar, remember, the Australian dollar by itself was the second weakest pair overall last week. So it has to be able to get a little bit stronger in order for you, once again, to get a little bit more value to be able to sell it back down. We ended up doing very well last week, and I want to make sure that we end up basically capitalizing on the movement this week and being careful for our movements and being careful for the trades that we end up taking. So we can be able to have a good, strong end of the month. And then after that, take it into next month. So here we go. Economic calendar. If we take a look at this, I'm going to be very quick with this. The only thing that we end up seeing is that, okay, that just got put on the docket. President Lagarde is going to end up speaking at 9:45, and then after that, we're going to end up having the Tokyo fresh food and energy index. Going to end up seeing what that overall news is. So today is a trader's day when it comes down to it. Now, the word of the week when it comes down to this overall movement is retracement. You don't know what retracement is. Basically, what that means is a market is overbought or oversold. And from that overall move, we should see that the market should, after end up taking a high price move, kind of like what happened right here, where the market end up going very strong in one direction, you should see the opposite happen, going towards that direction, going to the downside. So currently right now, we have a counter trend line break right here. Remember, when you end up taking trades and stuff like that, you want to be able to get confirmation for the overall move. So I'm not going to jump in on this move right here. We have a breakout. Remember, once you have a breakout, now you're looking for a retest. Now, based off of this retest, this market has not fulfilled its overall D extension yet at 12,175. I'm actually happy about that, because I'm looking at, because you want to take this move and you want to trade it to its overall long-term movement area, which is expected to be at 12,235 or even higher. You want to keep on getting low prices to where you can be able to sell. And if you can be able to, low prices where you can be able to buy. You can be able to get that, then that means that you can be able to get value. But right now, we're looking at overall trading opportunities to where you can be able to get in. But once again, you don't want to be the first to jump in, especially when the market has been so strong. You want to see the market basically break out, give you a retest area. Then after that, then look for a trade to be able to take once you end up getting that overall move. So US dollar index is in the sell zone. We see a break in the sell zone. We want to look for an overall movement where the market kind of retraces again, and then after that gives us another selling opportunity. Then from there, we can be able to trade it slightly towards the downside. I'm not looking at trading this one a long way, because obviously I believe that the market is bullish overall. So we should see some short-term bearish activity and movement from there. Going to take a look at oil. If we look at the movement, this market had that breakout area from right here. Based off of this evening star candlestick formation, the market has been pushing up ever since then. Currently, the market right now is at $40 a barrel. If the market keeps on pushing up above this overall trend line, then that means that this market is not going to end up being truly bearish as of yet. So going into this week, if we're looking at being able to buy this, then you could say, okay, well, I want to buy this to, we put the fibs up to this level. You could buy this up to $44 a barrel. I'm personally looking at being able to sell on this overall market. So I'm just going to wait and kind of see how this market is going to gradually move. Remember, we're a couple weeks off of this ascending triangle in this breakout from this area. So we should see this market give us a slight retracement. If it does give us a retracement to the 2-hour D extension, then that's expected to be at 42.55. So if there is an area where I would like to be able to sell, currently right now, that I end up being in that spot. If we look at what the market is right now, to me, in this overall mindset, we're basically at the 5-0. We're not at the 618, so it's not necessarily the greatest trade to be able to take. We do have a counter trend line break, but the market has retraced back up from that overall movement. So it's kind of in a position to where you can, if you want to be able to trade it, but it doesn't have no retracement area. I call this a R6 position. Anytime that the market is in an R6 position, this is at a point to where it is not tradable to me. With it not being tradable, that means we have to wait for it to be able to give us a rise in price. If we can get a rise in price, and after that, we'll be good for us being able to trade that one in the near future. But we'll be able to get a better quality price to be able to get in. Take a look at gold. We can see the same thing. Market broke the triangle. Market broke the triangle to the downside. We're in the buy zone. We expect some upside movement. Now remember, we're looking to be able to get this in the buy zone, be able to have some upside movement forward this price, and then after that, look at being able to sell down. For people that like to trade, for the people that are interested in being able to trade, I will look at a 2-hour counter trend line break and a retest. Once you end up getting that, then after that, you possibly could be able to make a trade from there. You have the break, you had a new lower low, so quite frankly, I would look at being able to find another retest area, which will probably end up being right around here. If we go to this point right here, we get a breakout from this area right here. Then after that, we get a retest from that move. Then after that, I think that you'll end up having a solid position for us being able to get in, especially if the market gets into the buy zone at this particular point. You're looking for a breakout, looking for a retest, and then after that, trade it up to the. You can keep on trading up to probably this halfway point movements. More than likely, it'll probably end up being somewhere around there, right around the 1.1896 area. The reason why I'm saying that is because we have a little bit of support in that area, we have a little bit of resistance in that area. I think that the market could push up to that overall spot going into this overall week. Okay, so there we are when it comes down to that. Now, with that being said, because this is boot camp week and because we are talking about some of the things that you will end up seeing, I want to talk about probability of success sheet. And typically what happens with the probability of success sheet, I'm going to take myself off the screen so everybody can be able to fully see what I'm talking about off of this sheet. What I end up doing each and every week, and I'm actually going to have a dedicated video off of this, is that each and every when the market is closed, I actually end up going back and I take a look at all of the pairs and kind of give an example or kind of understand what's going on with the market. Remember, we look for trade alignment when it comes down to being able to take the trades on each and every pair, and from each and every pair giving us trade alignment, it kind of gives us an idea about where the market is going to eventually end up going and what we want to do for our overall plan. So all of the stuff that we end up talking about inside of this session is broken down into these notes when we talk about probability of success, which allows you to be able to take a look at the only trading pairs that make sense when it comes down to that overall week. Obviously, we talked about the pound, that the pound had an 82% chance of being able to move. We said that the market was going to the downside, so we're not looking at being able to buy at this particular point. We're looking at selling. So we need to get a high price when it comes down to that movement, right? Notes are in here, talks about the push zone, talks about the ranking, talks about when to be able to get into this trade. This is the single most important thing when it comes down to overall trading and getting an idea about it. And then from there, you can actually be able to take that and be able to use that to our new 5-star Forex money advisor, which basically ends up telling you what type of trade you can be able to take once the market is in that overall trading position. It tells you how much you can be able to risk. It tells you what your reward could possibly end up being based off of that. And it tells you how much you can be able to capitalize and stack onto that trade while you're actually going through. If you want to be able to learn a little bit more information about what we end up doing from an everyday basis when it comes down to this trading, because we end up making it very simple to be able to get into, hop inside of our Forex Trading Bootcamp. It's going to end up starting today. Deadline starts today. Or deadline is at 6 p.m. today. So if you're interested, if you have contacted me about that, remember the deadline is going to end up being a little bit later on today at 6 p.m. Remember, tickets, I'm going to actually end up placing a link right here. It is bit.ly. Let's see. It'll be nice if I can spell today. bit.ly/take action tickets. All right, if you're definitely interested in being able to hop in, it's literally $15. It's $15 a day on this overall session. You're getting so much within this overall session. Quite frankly, you're getting a steal when it comes down to this overall price. But if you are interested in being able to learn a little bit more, being able to hop into our sessions and being able to take action for your own self, this will be a great time to be able to hop in and go to that boot camp. With that being said, let's go ahead and take a look at some overall pairs. I want to focus in on the pound first because I want to see what end up happening based off of this move. Now, sometimes the best trade is not making a trade at all. And what do I mean by that? That means that you are not in a position to where you could lose money. Okay, so if we're looking at this overall position right now, let's say if we were selling on the U.S. dollar at this particular point, when it came down to this overall market, then quite frankly, we would be very upset waking into the morning, because if we look at it, we truly have this bullish engulfing candlestick. This is more like a morning star, but you had 3 indecision days based off of that movement. So it gave you 3 days of opportunity to be able to get out of this pair. Currently, the market has been moving 173 pips since that overall range. Basically, what happened was it basically ate up all of this. Movement that ended up happening from the downside. Basically, unless you end up catching it right on the day when it ended up breaking, you basically are in break-even positions right now. So once again, the reason why I say sometimes the best position is not being in a position at all is because of that reason right now. So overall, what are we looking at? We can see that based off of the weekly, we end up breaking the counter trend line break to the downside. We have that. The market is basically retesting at this particular point. It broke the innermost, it broke another inner, and then after that, it broke this outer trend line right here. It's retesting the outer trend line from this overall spot. Once it gives us a high price right here, then after that, we should see this market kind of retest and give an answer about what's going to happen with this market. Now, just because it ended up pushing up very rapidly today doesn't mean that it's not going to push to the downside very rapidly tomorrow. But it also means that the US dollar is actually weak at the same point. So this is kind of like the perfect storm when it comes down to this overall movement. This is almost expected that you would end up having a huge volatile movement to the upside, because if we're getting any type of good news from the pound and we're seeing that the US dollar is going back from transition to being strong to having a little bit of a retracement this week, you're going to end up getting moves like this. So going into the daily, what I would look at is that you'll want to see how this market is going to end up reacting for it being able to push up. I'm still looking at being able to sell. We have to see if this market is going to end up reacting to the outer trend line and see what's going to end up happening. More than likely, we'll probably end up getting a movement right up here around this area. The reason why I'm saying that is because we had previous support in this overall position. I think that position will probably be right around the 131 area. We go back and let's take a look at I want to take a look at volume profile. Let's see what we have for us this position. Let's see. Yeah, 131. Perfect. As soon as I end up saying that, that's a great position. Okay. 131 is a point of control. If we end up looking at how this market basically ended up moving before. So I would look for the market to be able to move up 200 pips and be able to get up to that position, to that point, and be able to sail down from there. If we're looking at this market basically moving. Now, this is basically from 2020, all the action that has happened from 2020 to that large movement to the downside, to this large push to the upside. The average price of where people have been placing in most of their sales and most of their buys have been right around 131. So it's not surprising that this market ends up pushing up towards that area. So the question for you is, if you know that the market is going to move up to 131 or eventually move up to 131, should you look at buying right now? The answer is no. The reason why you should not look at buying right now is because that currently right now, when we pay attention to where the market is at this particular point, we can see that this market is in the sell zone. So there's a couple rules that you need to remember. One, you want to find trading alignment. Two, you want to be able to buy in the buy zone. You want to be able to sell in the sell zone. Three, you want to be able to have good, strong equity management. And four, you want to be able to have patience. Okay? If you end up doing that, then that means that you're going to end up finding high probability trades most of the time, because this market has already moved from being very weak to pushing up and being very strong. At the end of the day, the market is a little bit overextended. So I would expect that you will see that some movement will end up going to the downside. Once you end up getting that movement to the downside, then after that, look at being able to buy it back up and then go after the 131 position. Once you end up getting that, then you should be good. Now, that could be right around 300 pips if you end up looking at it and playing it right. Or it can be maybe 100 when it comes down to that overall movement. But it's a safer move than just jumping around on this position trying to get in at this particular point. Quite frankly, it doesn't make any sense if you don't do that as of yet. You got to wait just a little bit, and you should be going from there. So we should be good on that. Let's take a look at the Australian dollar, United States dollar, because we end up saying that that was the second strongest pair when it came down to this overall movement as of today. Now, remember, when we're taking a look at overall trading pairs right now, we know that all of the trading pairs against the dollar were very weak at this particular point. End up having a very bad week when it came down to the overall dollar. The dollar was in a state of transition of getting stronger. Every other pair was in a state of transition of getting weaker, especially the Australian dollar and especially the New Zealand dollar. So right now, we're looking for a counter trend line break first from this overall movement. Then after that, we'll look for a position to be able to get in once we end up getting a overall retracement. All right, now, in order to be able to get a retracement, you got to find a counter trend line break. That means that we have to have other people basically push the market up for us, for us to be able to feel comfortable to be able to get into that market movement. Hopefully that makes sense for everyone. So currently right now, what I'm looking for is I want to look for a sustained day of overall bullish push. And then after that, going into tomorrow, that we can be able to find a area in the buy zone of this overall market. Let's see if we can be able to buy this up to the 382. Now, we won't know what a 382 is until we end up having a full day of overall movement. But if we take a look at this from a 2-hour perspective, the market is expected to go up to 71. And we can see that the market is a little bit extended right now from this overall movement. Now, if we were looking at being able to buy this a little bit earlier, would have been up 40 pips. Quite frankly, I wasn't here to risk it, and I'm still not here to risk it when it comes down to an overall move like this. So I'm waiting on a retracement. Once we end up getting that retracement, then after that I'll feel comfortable in being able to buy it at this particular point. As my son just woke up. Say hey. No, say hey. There you go. All right, say hey to the people on Facebook. Say hey to the people on YouTube. We're actually going through that. So as we go through and we take a look at this pair on a daily, I'm looking for a little bit of a low price. Once we get that low price, then after that, I'll look at being able to buy. But I want to buy in the buy zone, right? We don't want to sell in the buy zone. We lose money when we sell in the buy zone, right? We lose money when we buy in the sell zone. I mean, we lose money when we buy in the sell zone. So we want to be able to catch the market when it gets down here. And then after that, look for a trade to be able to get in from there. Hopefully that makes sense. And most of these pairs, you're going to end up seeing the same thing. We take a look at what's going on with the U.S. Swiss franc. U.S. Swiss franc market ended up pushing all the way up to the 93 area, broke the inner trend line. Now we know that the market is going to eventually gravitate toward the outer trend line, but we have to see it basically retrace a little bit. Market is in the sell zone. This has been the strongest pair against the U.S. dollar for a while now, but the weekly and the daily, the extension ended up hitting. So currently right now, if we look at it, we see a tweezer top that's actually being created right now. We don't know how the rest of the day is going to end up being, but if it remains to be at this point, a tweezer top is a reversal candlestick formation, which means that we should see the market start to retrace back down. Okay, the question is, where's it going to retrace down to? Well, if we look at previous history, we can see that this market was in a consolidated area from this overall spot first. So if we treat this as consolidation, this would be the breakout. Then the retest would end up being basically at past resistance equals future support. So past resistance equaling future support would end up being right around, I'm going to make this in blue so everybody can be able to see it. Past resistance equals future support will end up being right around this 92 able right here. Okay, so looking at being able to buy it right here will be a great area to look at. Be able to buy it long term towards the 9300 area, towards the 9700 area, where I think the market is going to eventually end up going for its overall movement. So I'm not looking at trying to get pennies when I'm trying to look at getting thousands of dollars, and I'd rather put my money in a position to where I can be able to get thousands of dollars based off of this movement, based off of finding the right position. So I'm not chasing the market on this one. It doesn't make any sense to chase the market for us being able to trade against the direction of highest probability right now. Hopefully that makes sense when it comes down to this overall movement. So right now, market is bearish. I'm going to allow everybody else to be able to trade off of that one. Let them go ahead and spend their money on that. If they're right, then that's great. That means that we get a higher price. That means that we get a lower price to be able to buy. Taking a look at the U.S. CAD. U.S. CAD at this particular point, once again, in the sell zone. We see that the market is being in the sell zone. Excuse me. There's an expectation that the market is going to end up selling off. So right now, We end up making our money when the market hit the D extension from this overall movement. Currently, right now, we don't even have a Fibonacci to be able to work off of. So there's really nothing to be able to do at this particular point aside from wait for a counter trend line break. Once this movement gives us a counter trend line break, we could possibly be able to scalp the market to the 382. But once again, we have to have confirmation for this overall movement. Right now, we don't have a fractal high until 5 p.m. today, so I'm not necessarily worried about being able to trade this market as of yet. I do expect that this market will fall back to the point of control at right around 1.3182. If we can be able to get that, then after that, we have a trade to be able to buy up to the upside once that ends up happening from there. So once again, no trade when it comes down to that position. If we take a look at the Euro United States dollar, same position. Market did not complete the D extension movement right here. We have a bullish type of trade right here. The market is in the buy zone, but we don't have a counter trend line break as of yet. Once we get a counter trend line break, let's say if this market remains to be above the overall trend line, then after that, we'll look at being able to buy up. On this position, this market is considered to be bullish, long term. So we probably see a little bit more of a extended movement when it comes down to the upside on this overall pair. And it may end up going back up to 1.19. We'll see how this market actually ends up reacting to it. But overall, if I'm looking at being able to trade a pair, watch your step, baby. Look at being able to trade a pair based off of overall movement. This will probably be one of those pairs that I'll look at trading a little bit more heavily because the market is expected to be bullish based off of this movement, this long term at this particular point. So right now, there's no movement, there's no trade to be able to take at this particular point just because of where the market actually is. Last pair that we're going to end up talking about today is going to be the New Zealand dollar. Once again, it's probably going to end up showing you the same thing. So I don't want to sound like a broken record, but this is pretty much where we are right now. We can see currently at this position, we see that this market end up having a movement to the downside. Actually, let's go through this one a little bit more. Let's go through the weekly on this one. If we look at this overall movement from here, this market end up finally breaking out of this long-term bullish move. We had a counter trend line break towards this overall area. Remember, when you have a breakout, you look for a retest. Okay, always. Once you have a breakout, you wait for the retest. It doesn't matter about what time frame you're looking at. Wait for the breakout, look for the breakout, wait for the retest. Once that happens, then after that, you have a trade to be able to take. Okay, so at this particular point, with this breakout, we have to see this market start to push back up. Well, where is it going to push back up to? Well, let's look at previous history again. We've seen the market have a little bit of resistance and prove to be a support area right around the 6,700 area. So I would expect that if we're looking at this overall market, I would expect that it's going to go back up to 6,700. Okay, now right now, currently that's about 150 pips away. Now remember, if the market is in the buy zone or the market is in the sell zone, then typically that takes about 7 to 11 business days overall movement to be able to push up from there. Good morning, how you doing, Carolina King? Hopefully hopefully you're doing well. You want to see what we're doing from a live screen perspective? You can be able to go to Trade with Travis on YouTube and be able to hop in and see what's going on with our charts. If you have any questions about any type of trading pair or anything else like that, you can write that down in the questions box and I'll be able to answer you when it comes down to that. So if we're taking a look at this overall pair based off of the daily, when it comes down to this movement, I expect that this market is going to push up to 6,700. Currently right now it's 150 pips away. We don't have a counter trend line break as of yet because we had that one movement on Friday where we had that large wick. You want to be a little bit more aggressive. You could kind of say that you have that movement right now, but I'm going to be a little bit more on the conservative end. I'm going to wait for this market to be able to break past this line right here. Once that happens, then after that, I will look at being able to trade it towards the upside on this overall pair. Now, this is a projected field that I think is going to end up happening. The 382 is at 66.20. Then after that, the 618 or the sweet spot is right around the 66.87 area. So I do expect that the market's going to end up pushing up towards that area. But once again, I'm not jumping into the market today. I want to see how people end up reacting towards this overall U.S. dollar weakness, and then after that, trading it based off of tomorrow's movement and getting into the buy zone from there. Hopefully that makes sense when it comes down to that overall movement. All right, so pretty much we've talked about every pair and pretty much every pair is in the same position at this particular point, and being able to find the best position to be able to get in. I would wait, be careful, allow the market to be able to move towards you, allow the market to be able to break out, come back, retest, and then after that, get into the position from there. Once you end up doing that, I think you'll be in a very good position of being able to get in and being able to get some movement based off of the retracement of a week that we end up having. Now, if you like what we end up doing, please make sure that you end up liking the Carter Capital business page. Please make sure you go to Trade with Travis on YouTube and be able to subscribe to what we're doing on that. Also, please make sure that you understand that we have our Forex Trading Bootcamp today. I believe in yourself bootcamp. It's going to end up being 5 days this overall week. We're going to go Monday through Friday from 9 p.m. to 10 p.m. We're going to talk about topics each and every day, being able to help out a new trader or somebody that's trying to find that edge in Forex trading, to be able to help them out and gain that little edge when it comes down to overall movement. I'm excited to be able to talk to each and every person. This is one of my favorite weeks of the month because we end up talking about a lot of good stuff when it comes down to trading and being able to help out a lot of people. And for the people that are doing it this month, you're actually getting a couple goodies. You're actually going to end up getting our trade tickets to where you can be able to do your equity management yourself. We're going to end up helping out, being able to get you a brokerage account and being able to learn how to be able to trade off a demo with our overall with one of our trading styles that we use for scalping the market. And obviously, we're going to teach you how to be able to trade with other people's money and be able to go from there and use that to your advantage so you can be able to get a good risk return on investment when it comes down to overall trading. Now, until then, once again, believe in yourself. Change will end up coming. Change always comes when you end up believing in yourself and putting in that work. And like always, plan your trade your plan. I'll see each and every one of y'all tomorrow for a new video. Take it easy.